Okay. So like this setup that I caught this morning, like I made like $1,000 this morning. Basically this is US30, but the breakdown always starts from, the highest time frame. That's basically how, I was taught with training with Q and everything like that. So, you know, what I got on my charts mainly is like my moving averages right now, and also like something new I've been trying out. It's like this Fibonacci like point indicator, and it basically just plots, as you can see, like certain points of support and resistance. Will support being at the bottom and then resistance at the top. Where you could plot certain Fibonacci tools, and I just feel like it's a good visual aid, as you can see what the candles are doing, right?
Yeah.
So even just taking all of this stuff
Take a
off.
picture.
Huh?
I said, yeah, I'm gonna take a picture right now.
Okay, cool.
And
Yeah.
that's live, so that really counts as support and resistance, like them solid areas.
Yeah. I mean, it's nice areas to look at, just to be like, okay, well, it's exhausted down here. These points are down here. So it's kind of it's just like the it's just like having the moving averages up. It's just a different, excuse me, a different way of looking at the market, a different dynamic way of looking at it, if I might say, for real. Cause the dots is like they change colors and stuff. So it's like, all right, bet I know this was blue because it made like a lower low right here. So that's might be an area I want to pay attention to, And after it made this lower low, this might have been a retest just based off of how things was back here. So I just look at things and I just wonder why, why is it doing what it's doing? And that's the only way to really get better with this craft is just, always want to critique yourself and get better. You know what I mean? So I just added it recently, probably about like probably maybe like a week ago, 2 weeks ago. So it ain't nothing that like I pay attention to too much, but it's something that I look at when it's like, all right, where's my highest support? Where's my highest resistance areas? It makes
You can
sense.
show me the settings to that. Yeah, that makes sense.
Yeah.
Like, what's the name of it?
Oh, yeah. I went to indicators and then I just typed in damn, what was it? Like Fibonacci pivot, is it pivot point? No, it's not pivot points. Yeah, I think it's damn. Yeah, what was that joint called? Mm, it was like Fibonacci moving averages or some shit like that. Hold on. Yeah, I don't know. Give me some time. I gotta see which one that shit was. I think it was this the pivot points for real. But uh,
Yeah, nah, you can just send it out to me later.
yeah. I'll send that joint to you. I gotta go back and dig through it. But yeah, so that's what I do. Start off, monthly time frame, like I do any pair or indice, no matter what it is, because that's gonna give us our broadest perspective on the market. From that point, I'm just breaking certain things down, and as you can see, what I was looking for here, like on the daily time frame, I seen how the market was looking last week. We had a lot of bullish momentum, especially after our moving averages crossed. We made new high points that was up here. Then the market had retraced and pulled back. As you can see, it was respecting like this area is like a 23.6 area on this daily time frame. But my fibs was based off of I think like the 4 hour or 1 hour. I think it was the 1 hour. Let me see, zero to no, it was the 4 hour. So yeah, and it's just been bouncing around this 23.6 area. So as you can see, like everything was tested here, tested, tested here. It never like fully broke and went bearish. And my bearish candles are like the green ones. The bullish ones are like that pinkish color.
Yeah.
So it went like it never went like bearish. Like it stayed in this area. So me knowing that and then just seeing how that support lined up here, you know, we were just waiting for certain breaks in that area. Once we seen that happen last week, this week, uh, this week where we're at, we were up here testing this 33-100 area, and we were starting to see like pullbacks and exhaustion, things like that. And then that's what we seen when the market opened. So that's what was happening basically. So yesterday I seen all of this happening, but what I wanted to make sure I made that made sense was after I seen these certain areas break, this let me know like it's releasing a bunch of selling pressure, right? That's why it broke like lower high points here, boom, came up. You got the back test or the retest on the back side of this trend line that's based off my 30-minute time frame. Boom. Then it broke my higher time frame counter trend line, which is based off of the I think like the 1 hour, 2 hour, and then kissed that as well on the backside. Came back up, made a point of support on the lower time frames being like M5, things like that. So I had to be on the lower time frames here, waited for this break that happened and all this exhaustion that happened. So I was analyzing all of this stuff and back testing this stuff on Saturday. So um once market opened Sunday, I knew what I was looking for. You know what I mean? Like I was like, all right, I'm just waiting on the market to pull back and for the bullish momentum to come back into that market. So once I seen that the market tested here, around what time was that? Was it 1 in the morning? Yeah. So it started testing 1 in the morning, uh, showing signs of support here. Boom, came back, saw signs of support here. I knew I had a area that was once respected as resistance, now turned support. So I knew that this would be confluence. This is a confluence area. So every time the market came back to this area, bro, I was sniping. Honestly, just waiting for it to break out. I'm sniping every time. Every time, boom, I'm in. You know what I'm saying? Boom, I'm out. Boom, I'm in. Cause I knew my projection was to break past this higher low because that's what my fibs is based off of. You see what I'm saying? So it's the
Yeah.
higher time projection that I'm going for, but at the same time, I'm just taking advantage of the overall move. So my entry ended up being right. The thousand when I made the $1,000 was what was it right off of this like off of this wick. You see how I got this line right here, right at 32,900. I kept
Yeah.
seeing that it respected that multiple times, and that was the tip of my exhaustion zone. So when I was on like M15, M1, even like M1, I'm gonna show you on M1. You see how I got this blue line right here? I'm gonna show you even on M1 how it broke. So I was looking at structure. Where is that? Back here. Right here. See what I'm saying? That was my
Yeah.
entry candle. See how because we already had a break that happened. Yeah, this is the blue line. It just looked big as hell because we're on the 1 minute. But yeah, see, it was respecting this resistance. The market came down here, right? Even what we could do is draw like a little counter trend line on M1. I'm gonna turn it blue just so we stay on the same page. Boom, it breaks that, right? It's respecting a certain point of resistance, right? It breaks the resistance on M1 right here, right?
Right.
Breaks that, right? That 1-2 bullish candle on the level of resistance. Doji indecision. Next candle bullish above the moving average and above this area, let you know it's enough buyers in this market at this time, right? So boom, we know that's happened. So now we just waiting on the market to come back, retrace, do what it got to do, and then after that happens, I seen that like I told you, it was just testing this this area right here. It kept making them bullish engulfers. So once it made that bullish engulfer, I'm like, all right, buyers in the market, moving average just crossed again, came made that high, came back, made a higher low right here. So once I know that a higher low has been made, Q teaches that means buying pressure is coming into the market. So that's where you want to be looking for your entry. So this candle right here was that bullish candle that let me know it's more buyers in the market. This was the setup. So I would say like from here to here was the setup. And then boom, that was the entry.
Okay.
Boom, we took off. You know what I'm saying?
Man.
For sure, for sure. You know what I mean? And we're still bullish. You know what I mean? We still bullish, man. Like I closed out with 1,000 somewhere in here, and you know what I mean. I, I was cool with the profits I made, you know, and that's what it was.
Man, that's all. I mean, and so you took that trade off the 1 minute, or you just took it
I
off
took
the
that
area?
entry. I took that entry off the 1 minute. Yeah, yeah, for sure.
Okay.
Yeah. You see, I took this up. You know what I mean? And it's still maintaining structure for the bullish, you know, the bullish momentum.
And is there certain times where USA just had the
I'm tripping.
momentum
I
start
didn't
to pick
take
up?
this up. I'm sorry. I didn't take this up. It was this candle.
Oh, okay.
Took this candle up. My bad.
What time is that?
That
Yeah,
was around the time you hit me up and it was like, what time we getting on the charts? And I was like, give me
okay.
2 hours.
Okay.
Yeah, had to get right real quick.
Oh,
But yeah, so that's like a way that you know, that I find entries, you know, and things like that. Even using this area as confluence, like how it broke up here, it gave you some exhaustion, but it gave you another higher low right here. It's another buying opportunity. You know what I'm saying? That's a bullish engulfer on a 30-minute candle. You could maintain that. You still seeing bullish momentum on a 30-minute. 4 hour, you're still seeing bullish momentum, some slight exhaustion, but we know what the overall push is. We still got the moving averages is being respected on the higher time frame. Daily candle is looking exhausted. It's looking like more buyers are in it than sellers. You know what I mean? At this point in time. So all you always want to do is just float with what you see. You know what I mean? And minimize your risk. And you minimize your risk by being, especially with pairs like gold and indices, especially indices, indexes, whatever. You want to be on as low time frame as possible, so that way you're not seeing as much drawdown, bro. You know what I mean?
yeah. Man.
So those are the things that's just being about, you know, being detailed, having a plan for the trade, you know, understanding what areas that you wanna get to, and like this was like a TP area for me. You know what I mean?
Yeah.
Based on previous resistance right here. Boom. Once it came up here, boom, instant hit TP. You know what I mean?
Yeah.
Took profit. I was good. $1,000 made. Boom. Came back, retested. Boom. Broke back above my trend line. Boom. We back in, taking it back up for the same way. You know what I'm
Man,
saying?
that's how slow.
That's how you trade, though. You know what I mean? Low risk. So if anything, I'm not risking much because it's so much buying pressure right here. If my entry's right here, hold on, why I do that? Hold on. Tweaking. If I do that, if I enter right here, bro, you know what I'm saying? Like, I got my moving average right here. I'm risking like 45 points to 61 points to get potentially 100 points. Or what's that? Yeah, like 100 points. You see what I mean? If
Yeah.
especially with my higher time frame analysis to break past this to get to that negative 27 up here. You see what I mean? Like that's how you have a bias and stick to it, and you just wanna you really wanna just you know, scale in and take advantage of your overall time frame move. We know what our overall time frame move is based off our fibs off the 4 hour.
That's another question. So I need to get decent how to use fields.
Okay.
Yeah.
Yeah, that's a bet. We can get into that. That's nothing. We'll get into that. I we'll do that another session because that's a whole. We'll spend a whole day on that. You know what I mean? Just back testing fibs and stuff like that. And then other ways, like I said, I like the back test is just understanding like certain areas. Like, okay, for instance, we seen that this was an area of resistance that came down, started broke out of this level of support right here. So we'll put a random line right here. I'll change it. Change this to that dark blue because we're on the 4 hour. And I'll put it at the median of these wicks at the lowest point around here.
Mm-hmm.
So support was broken right here. Boom, boom. Came back, retest. Areas like this, you seeing the exhaustion. That's what I mean. Like, cause you only risking at this point, if you looking up here, you only risking, you know what I mean? Like 21 points compared, well, on a 4 hour time frame, of course it's gonna be higher. It's like what, 233 points. But
Yeah.
we getting in on a lower time frame. So really we wouldn't even be measuring it off the 4 hour time frame. But just being able to understand where I'm seeing certain setups and where where I want to take advantage of the market. I'm only wanting to take advantage of the market where I'm more probable. You know what I mean? Like where my edge is. That's why when they talk about edge, that's what they're talking about. You know what I'm saying? So even like right here, like I already know like the highest point of resistance is up here. I know that we had broke that point of support. I know that we came back up. This is a lower high compared to this high. I know that we have previous resistance also right here. If I drew this random line, looking to the left. So there's no reason for me to be scared to enter in these type of areas. You see what I'm saying?
Yeah. Okay. And then them dots coming in handy too. You know, blue. Uh,
So yeah, like you see what I'm saying? Like stop loss up here somewhere, and but my man, my TP, you see what I mean?
and
Like it's a big difference when you really trying to trade for the move, and especially with pairs like you said, gold US30, because the risk to reward is so good. That's why like even once Q was like, bro, like I'm not trading nothing else. It's like you right. There's no point because the risk to reward is so much better on these other pairs. It ain't no point on the forex pairs for real.
yeah.
And you gonna
But
you gonna know if you right or you wrong.
nah.
You feel me? So that's at least that's how I think about it and go about it. Cause that's how I would that's how I
Yeah.
would do it. So
It's so how does the pitch count go on US30? Is it different? Like
I mean
it
it's
goes
points, you know what I mean? So it's like I seen somebody put in a chat today. It's like what a .01 is like $1. You know what I'm saying? Come and then like a .10 is like $10, and then standard is literally $100. Like it's the same, but it's like pushed down. You know what I mean? So instead of using like how a standard would be $10 per pip,
yeah.
it's $100 per point. You know what I mean on US30.
Oh,
You
okay.
see what I mean? So it's just like it's taken up a notch. So that's why
Yeah, I'm
it's
using your point zero
imperative.
one.
It's imperative that you know how to use your risk, and how to leverage your account.
And so you like you build them moves off the higher time frame so you get a bigger move.
Right, right. Yep. I mean, that's how I get my projection, and then I'm on the lower time frames because the lower time frames build up the higher time frame.
Mm,
You see what I'm saying?
yeah. Man. So,
Yeah. So
mm. So you don't like draw your structure up before you mark up your choice, or you just damn near know it by now, like this
I mean,
how high, this
I
how
don't
low.
do it. I don't do it no more because it's like my eyes is so trained to see it already. You know what I mean?
Mm-hmm.
So like, it's certain things that like I don't need to have on my charts. But like, if it helps you, then it's like you should definitely do it. You know what I mean? Because I used to do it for a long time. It's like I don't need to do it anymore for real. Because I already know what's my higher high, what's my higher low, what's when structure's broken, what's being tested, what's being broken. Like, and that's the biggest thing in this is understanding like when certain things are being broken. Like for instance, right here, you got this area that came down, maintained this level of support, wasn't really broken, came back up, retested this double bottom area right here. So if you had some type of random line down here that you would know that this is all being supported. Nothing was really broken, especially seeing how everything's being exhausted towards the bottom. Then you had
Yeah.
the break, and then and you know it was broken right here because you had a bullish candle that formed on that level on that trend line, and then a bullish candle that formed. I would even say because that one got exhaustion, I would even say on the lower time frame you would see that it's broken. So I would have went down to like the 30-minute time frame because I know for sure on the 30-minute time frame.
And so what are you basing your structure off of? What time frame? Or does it
I
just
do.
depend?
I mean, it just depends on what you see for real. Like on certain things, I'm gonna see clear on the 4 hour. If I need more detail, I could be on the 1 hour. You know what I mean? But the 4 hour and 1 hour is so close that sometimes I'll go straight to the 30 minutes so that way I can see a bunch of detail. See, like here, I can see like six candles, seven candles. You know what I mean? On the 1 hour, it's gonna be three candles. See what I'm
Right.
saying? But on here, I needed to see what broken, so I can see now that this is the break. You see what I mean? Like all of this is
Mm-hmm.
what broke it, broke this level that was being respected. So once that was broken on that lower time frame, that's what caused that higher time frame to be respected once it pulled back. So it's like understanding how all of that plays a part. That's how you could get entries like right here. Boom. That's an entry. And you taking it up and you're not seeing much drawdown and your stop loss is right here, right underneath structure. And then your take profit is the next higher high, looking to break this area.
Right.
So that's how you back test and stuff like that is like looking for key areas that make sense and just figuring out like what did I need to see that, would have made me get in this order or how would I have maintained this order? If I had this balance, what lot size would I have used? What have I been what would I risk? How much drawdown would I have seen? And that's why the replay tool is important too on here because you can actually see live price movement.
Right. Okay. So could you show me an example on how would you like delete the marketing? I mean, use the replay too.
You said say that one more
Like
time.
I said, can you show me like an example on where you use the replay tool to like
Yeah,
back
yeah,
test?
yeah. I can show you like for that move. For instance, if we were looking at, I don't know, let's
You
see,
the same move.
yeah, let's say we were looking at, um, like that move we were just looking at, like right here, right? So it just took everything off the screen. So we would be looking at, okay, the market came and hit a point of resistance, just came and tapped that level, which was once a 23.6. So this was the real pullback for this push that happened right here. So we would have been waiting, you know. You see, and then you start to see the break, right? So after the break, it's like, all right, cool. I know the market's going, um, it's going up because it just gave me this bullish engulfing, and that's a pattern. I mean, a candlestick pattern. Um, it's like a three inside bullish pattern or something like that. When you got three
Mm-hmm.
candles and then that one bullish pattern engulfs all of them, and then you looking at how strong your moving averages is. You know what I mean? So you could have found an entry on a lower time frame, like maybe like M15 inside this candle to take it up. After just understanding where you're at in the market,
Mm-hmm.
and then boom, boom, and you maintain the structure the whole time. You see what I'm saying?
Yeah.
So that's how you would use it just to see like, oh, okay, I still haven't broken structure. Boom. Or my TP was hit based off of, you know, whatever Fibonacci I was using based off of whatever higher time frame at that time. Yeah, man. So that's mainly it for real. Like, as far as like the replay tool goes, that's how I use it. Like when I'm back testing, just so I can see and get a flow of how the market's moving and just things like that.
Okay. Never practiced it. So.
Yeah, do you get a firm concept of when I'm talking about like what's being broken and respected and stuff like that?
Yeah, I understand.
Cool. Yeah. You got any other questions?
Um, nah, not right now. I think I have to be thinking something next time.
Cool, man.
Damn, they broke it down good.
Yeah. Yeah, man. So the main thing I would just focus on is just definitely if you're gonna trade this pair, like just stick to it. And definitely back test it, so you can
A
see how
demo.
it moves and things like that. And demo it, play with the lot sizes so you can see how the money move, things like that. And it's pretty technical, man. Like to me anyway, I know people say like it goes off fundamentals for sure, when news hits and stuff like that. But I like looking at it from a technical standpoint and trading it from a technical standpoint. So, I'm looking for key support resistance areas, looking for it to play off my trend lines, and things like that. And, just normal price movements for real, for real. And just, as far as the trade plan goes, just not trying to get rich in one day. You know what I mean? Because like I said, the risk to reward is already good. So it's like you can make a decent amount with a penny with a penny lot. You know what I mean? So it's like you don't gotta go too crazy. You just gotta know what you're doing. Like, and you could literally make $1,000 a day for real, especially trading this.
But that's so real.
Yeah, it's the what I mean. It's the same kind of index. So yeah, it ain't nothing too crazy. Just gotta be patient, know what you're doing, you know, stick to what you know and keep a stop loss in there for sure. So yeah.
And how big of a stop loss you be using, or it just depends on
It just
uh
depends on where I
what.
get in at, honestly. Like some trades, it depends on my mindset with the trade. Like if I'm trying to scout, if I'm trying to hold the trade, more intraday, things like that. Cause it could be anywhere from like 50 points to 100 points. Just cause it's US30, like you gotta give it room to breathe. You feel me? But at the same time, you don't want to feel uncomfortable in your trades either. So if you ever feeling uncomfortable, like you just close out. You know what I mean? It's better than losing money.
Well, that's good. Yeah.
Yeah, so that's what I would say work on, man. Like definitely like have like probably like three setups that you could say that you back tested and you got a reason as to why you getting in, like how I was able to break stuff down. You know exactly why I'm getting in and what my projection is and stuff like that. Like I would say have at least like three of those that we could go over next time
Okay.
type. So that way we got something that to structure on and I can see how you let you drive for real. Like you know what I'm saying?
Yeah.
All right, that's a bet then.
That's a good bro.
All right then, bro. I'm gonna hit you
What we say?
for sure.